Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors. The Moose, John Mousseau, our CEO, Director of Fixed Income. Today is December 13th, 2024, rounding out the end of the year. There was some action in equities throughout the week. A little bit of backing and filling, some real moonshots in terms of upside, as well as some disasters. Fortunately, we stayed out of any disasters.
Always good.
Over on fixed income, some moonshots in terms of yield.
Yeah, Friday the 13th about sums it up. It was a scary week. We had yields up every day this week. So you look at the 10-year bond yield as we sit here today, 440. Geez Louise, it's up 25 basis points this week. That's a lot. Muni's a lot better behaved, half of that. And the reason is you look at a 10-year AAA Muni at essentially 286, that's up half of the yield. That's because there's hardly any supply because it got moved up before the election. But when you focus in on the Treasury side of things, combination of a lot of issuance, $119 billion worth of auctions this week. That's a lot of supply. Not record, but supply. And listen, it's something that the new administration is going to, have to face. And that's the fear factor. When we go back and forth on this, as we have all last year. The other part that's there too is you saw the inflation numbers. The CPI number was, as expected, 0.3 for the month of November. But, that's not making progress. It wasn't a surprise, but it's not making progress. PPI was a little higher. The core was a little lower than expected, offset each other. Same thing. Not a surprise, but not making progress. So you're at this spot where inflation has come down, but the rate at which it's coming down is flattening out.
Rate of change.
And the market is dealing with that.
Rate of change.
Right, the old second derivative.
That's it, rate of change. So that's slowing down. So a little bit of pressure on bond prices. Remember, prices react opposite of yields. Yields up, prices down. I have to tell you, at a 440, even though that rate of change was vicious this week, at a 440, I feel like equities can live comfortably in that 4.25, 450 area. So speaking about equities, December's just saw some backing and filling. We went from, I mentioned this last week, we went from broad participation back to narrow. If you're not in tech and consumer discretionary right now, you're getting beat over the head a little bit. You have multiple sectors down 3, 4, 5% this month.
Right. Perfectly
normal. Perfectly normal after a big 11-month run. Since you were complaining about the bond market, I'm going to, in terms of transparency, I'm going to have a miserable weekend. Let me tell you why. Our trader, Shay, my trader, and I were looking at Avgo. Who's Avgo? Avgo's Broadcom. For the last 2 weeks, as you know, we've been talking about semis have been kind of weak. Semis peaked in July. They've been one of the weaker areas from a peer discussion, sector to sector over the last 3, 4, 5 months. Avgo pulled down, got down into that 165, 163, 162. I said, Shay, I love this long-term trend line about 158, 159. Let's just see if semis, not Avgo, but semis can get themselves turned around a little. I want to go right into Avgo. That was last week.
Never quite got there.
Never quite got there. Bam. Reported last night, opened up 19% today, finishes up 25% on the day. That, for a equity manager and trader, is misery. That's pure misery. No way around it. You're going to miss trades the rest of your life. You've missed trades your whole life if you're an investor and trader. You know who doesn't miss trades? The liars. All right, everybody enjoy the weekend. We'll see you next week as we roll into Christmas holiday.